We're going to find out the lowdown on a couple of interesting value stocks here, one of which it's been out of the news, I think, for a while. Tracey Ryniec, our value stock strategist, is going to tell us about both of them. Before we get to the one that I think has been out of the news for a while, let's pick the top one on your radar list here, Helmerich Payne.
Yes.
Contract drilling company.
Yeah. I haven't talked about them for a little while, but I know I have mentioned them in the past because they've been a value stock for a while. You know, they're part of the energy sector, and that's basically been ignored by most investors. It still is. It's still among the cheaper of the sectors, so that is where I'm able to find some value. Mm-hmm. They have like a ton of rigs all over the U.S. and a little bit in international. They have 29 international rigs. But they contract them out to the big oil companies, and you know it's a lucrative business, especially right now with all the drilling that's going on. They have about 344 rigs, and they keep adding. I mean, their growth comes from getting more contracts to build more rigs. Sure. And they just announced another dozen or so that they've gotten for their fiscal 2014, which is right now they're in the first quarter. So, you know, that's what you want to see with this kind of company. That's a good sign. That means the estimates are going to be going up. As you can see here, 10 analysts have been raising their estimates after their last earnings and after this announcement that they got even more new contracts. Mm-hmm. So, you know, you're getting the good earnings growth. That's why it makes it a Zacks #1 rank here. Not huge percentage earnings growth. These are like a slow grower, but you know, still earnings growth nevertheless. So that's what you want to see. Right. And shares have been cheap for a while, and they still are. They're trading only around 13 times, I guess. That's under the S&P 500, which is almost 17 times now. So that's pretty cheap. I look for anything that's trading under the S&P 500 these days. But you know, they're trading near the 2-year highs here. But it's one of those slow grinder higher. You know, nobody really thinks that much about this company. It always gets mixed up with Hewlett-Packard because its ticker is HP. Mm-hmm. But you know, the drilling is a stable sector, and right now it's where it's at in the U.S. at least. Okay.
The other one on your radar this time around is Tata Motors. Now, am I right? Have they been out of the news lately, or have I just not been paying attention?
Yeah, nobody's been really talking about them that much. It's all about, you know, GM or Tesla, you know, these other hot companies. But Tata is interesting. They've been cheap for forever. I mean, I remember like a year or two ago, they were trading at like 4 or 5 times. But part of that is because they're India's largest domestic automaker. Mm-hmm. The best thing that they ever did in 2008, when all the automakers were struggling and, you know, getting rid of divisions and everything, is that they bought Jaguar Land Rover. So they've been running that, and now we see the luxury automobile market has returned, along with the entire automobile market, at least internationally, and that segment of their business is killing it. I mean, it makes up about 76% of their revenue now, which they should be thankful for, because last quarter, sales in that segment were up 40% year over year. That's huge. And China saw sales up 62%. So the names and the brands that they're rolling out, they rolled out a few new models of the Land Rover, and the Jaguar name is still strong. The brand is good. So, you know, rich are getting richer, and they're buying these luxury cars. Now, on the domestic side, that's their much smaller division, obviously, but sales were down there 39% year over year. So the Indian economy is struggling a bit here. They're not buying autos, but Tata's making it up for it on the international sales and in the luxury area. So you're basically buying Jaguar Land Rover if you're buying Tata here.
Or Jaguar, as they say.
Yeah. The analysts, there are actually 3 estimates we have on these for the year. That's pretty good for an international company. And 2 out of the 3 have been raised since they last reported because of the good sales out of the luxury sector. So you can see earnings going up. You do get double-digit earnings growth here, about 12% this year. They expect another 16% next year. That's what most of the automakers are doing, as long as the luxury side stays, you know, hot and China stays hot. Right now, there's no indication that that's going to change for now. So, you know, Tata's an interesting story. Like I said, it was really cheap like a year or 2 ago. It's still really cheap. It's trading under 10 times. I can find almost nothing trading under 10 times these days. It's at 9.5 times. Shares are near 2-year highs. They've been kind of like oscillating back and forth, but you see that a lot with international stocks. So, there's going to be some volatility with this one, but if you want to buy you're basically buying just the luxury brand. So if you're interested in that and the play that it has into China and all of that, and maybe hopefully the domestic Indian market will pick up at some point, then Tata is an interesting one to look at.
All right, do you own either of these?
I do not, but I do own HP in the Value Investor.
Okay, which you are the editor of.
Yes.
In case people didn't know that. If you want to check out other stock picks, you need to go to our website, Zacks.com. If you're not there already, check back frequently because they change very often with Tracey. I'm Terry Ruffalo.